President Trump announcing a massive worldwide series of tariffs.
New
tariff,
5% new tariffs in global tariffs on products imported to the United States.
On April 3rd, Trump's on-page reciprocal tariffs caused global markets to collapse instantly. The Nasdaq futures plummeted by 4.7%, tech giants lost trillions, and global stock markets were in bloodbath. On April 9th, he suddenly changed his stance again, suspending tariffs for 90 days on non-retaliatory countries, which can be described as a lightning-fast turnaround. The global financial market rebounded sharply, and Wall Street analysts were caught off guard and had to revise their reports overnight. Is a series of dramatic operations just the beginning? Who can guess what Trump is going to do next? Today, I will take you to quickly understand how the macro policy is transmitted to the crypto market step by step. How do we find our way in a crisis? If you are looking to stay one step ahead in the world of Web3, you have come to the right place. We bring you the latest industry insights and original research straight from our team. Just a quick note, this content is for informational purposes only, not financial advice. Let's first talk about the reciprocal tariffs on April 3rd. Trump's move directly made the global market a hot topic. The Nasdaq plunged 4.7% and the tech giants wiped out trillions in a day. 6 days later, it suddenly changed its face, saying a 90-day moratorium on non-retaliatory countries. Wall Street analysts were forced to revise their money scripts overnight, and traders almost disbanded on the spot. You think it's just an adjustment to tariffs, but in reality, it's overturning the table in the financial markets. No one in the global stock markets, foreign exchange markets, or crypto circles can remain unaffected. Let's briefly break down the chain of logic. Imposing tariffs equal higher costs for businesses, shrinking profits, and US stocks leading to the decline. A chain reaction in global stock markets accelerates capital flight to safety, reducing risk appetite for emerging markets. Inflation expectations rise, the Fed dares not to cut rates too soon, and Treasury yields surge. The dollar becomes more attractive, global capital flows back to the US. Non-US access, including our crypto, directly turns off the lights and eats noodles. You can understand it this way. The US tariffs are like throwing a nuclear bomb into the markets. The stock market is being transmitted to other financial markets, including crypto, followed by a series of liquidations. Whoever runs slower becomes a pickup man. More importantly, the crypto market is highly sensitive to news. A slight fluctuation in the traditional market can cause the crypto market to explode on the spot, leading to a chain of liquidations. In simple terms, it's a big loss. This reciprocal tariff shock is not the first time that the crypto market has been hammered by the macro. Looking back at history, you will find that behind every round of the big market in the crypto market, there is a macro policy visible hand that is fueling fire.
The World Health Organization has officially called it COVID-19.
In 2020, at the beginning of the outbreak, the global market hit the bricks together, with Bitcoin, gold, and stocks all plummeting as if power was cut. Bitcoin dropped directly from $9,000 to less than $3,000, a series of drastic cuts. But what happened next? The Federal Reserve saw the situation was dire and began to flood the market with liquidity. In addition to an epic unlimited quantitative easing, market funds surged out like a burst dam. Bitcoin rose from $3,000 without looking back to $69,000, transforming into digital gold that resists inflation. Inflation is coming. The Federal Reserve's strong interest rate hikes, shrinking the table. The market began to pump water. The dollar became expensive. tight money, risk assets began to dominoes. Crypto has not been spared, from $60,000 directly down to $16,000. What does this mean? Crypto is not a standalone market. It's a big pool connected to the global market. You think you're speculating on coins, but you're actually racing against global liquidity as well. Once the Federal Reserve tightens, traditional markets might cool down slowly, while the crypto market directly pulls the plug, plus triggers cascading liquidations. Don't assume macro factors have little to do with crypto. The crypto market is actually the most sensitive to policy changes and the first to go wild. Therefore, understanding these transmission mechanisms is not for the sake of passing a financial exam, but to ensure that before policies turn against you, you place your long positions in a safe position. Otherwise, you will be cannon fodder. How is this tariff storm different from the past? The key point is that this is not a purely economic decision, but a highly politicized policy move. For example, the reason for the suspension of tariffs this time is not economic considerations, but temporary adjustment of response strategies. This means that the market is more uncertain, more volatile, and potentially longer lasting. Crypto is facing a market environment that frequently switches long and short directions. So how should we deal with this volatile situation? Focus on key indicators and don't be swayed by social media. Indicators like US Treasury yields, CPI, non-farm payroll data, Fed Chair Powell's speeches, and Treasury auctions are the true signals of macro direction. Avoid heavy one-sided positions. Keep your strategy flexible. During periods of extreme market volatility, heavily betting on a direction can easily lead to being whipsawed. Control leverage appropriately, use stablecoins for transitions, or manage risk with hedging tools. Anticipate reversal opportunities in advance. Don't wait for the market to confirm before chasing. Each time policy fluctuates, it is actually improving the market sentiments. Once the market starts to expect massive liquidity injection, rebounds usually begin with Bitcoin, ETH, and the meme groups benefiting from the get-rich-quick effect on-chain. These highly liquid sectors will move first. This tariff storm is just a microcosm of global financial turmoil. In this era where scripts can be rewritten at any moment, any macroeconomic policy may trigger a chain reaction across global financial markets. And the crypto market is the first to sense it in advance.
We cannot predict what Trump's next move will be, but what we can do is maintain risk awareness, reduce emotional trading, and enhance rational judgment and analysis.
If you have better insights or want to discuss a topic, you can leave a comment in the comment section. Subscribe and like Coinstore official channel. Stay ahead of the market and see you in the next episode.